so much, everyone, for being here. I'm serious, Murphy's Law, everything that could have gone wrong with putting this first sort of content event together did go wrong, so I'm very glad to have made it to this moment of a room full of people, the food is here, the speakers are here, all that good stuff. Hopefully a lot of you guys know me. If not, my name is Zap, Z-A-P. I don't know what I would say about myself. I'm like a rogue character in the Nashville startup scene, just trying to build a good startup ecosystem out here, specifically through NashTech. Our mission is to grow this the startup community in Nashville, and I'm really excited to just start 2022 by bringing some specific workshops, panels, and content events to you guys, and not just networking. So please, stay in touch with me if you want to meet people with startups. I'm really excited tonight because we have 3 really exciting people to come talk to you all and share their wealth of knowledge. So first of all, you might not recognize this man because we got to call a bit of an audible. This is Reed. He is now newly the Southeast Growth Lead with Wefunder. So it was Johnny, but Johnny is unfortunately still traveling back from Dubai after, it's like a whole COVID thing going on.
Johnny got stuck there for like 2 weeks in quarantine. So
Can you get a promotion?
Well, my accent's not as charming as his, but I hope to offer some knowledge to you guys.
Yeah, so he will be representing kind of community crowdfunding for us. Then we have Jorge. Jorge recently relocated to Nashville. He's a 3-time CEO of publicly traded companies in Silicon Valley and only moved to Nashville. How long ago did you come here, Jorge?
Just over 2 years ago, right before the pandemic. Yes, perfect time.
And he's an active advisor, active investor. He loves to talk to startups, so hit up his line. And then I'm so excited to talk to also Alana Mann, who is here with Cultivation Capital. She is the principal there and also kind of back in Nashville, right?
Mm-hmm. Yeah, just moved here end of 2020, so also during the pandemic.
Well, it's great to have everyone, and I'm going to ask a few questions, but I think really I'd love to kind of move to Q&A for the audience too, but I think to get us started, maybe each of you could go through and talk about a little bit what you do and sort of how you're all representing very different kind of funding mechanisms. Maybe break down in a couple of minutes like how it works.
Okay, you want to go straight down the line?
Let's just go down the line.
All right, so I work for Wefunder. We're an equity crowdfunding platform. Basically, the SEC made it legal first in law in 2012, but it took until 2016 for the SEC to actually put regulations in practice that allows unaccredited investors to invest in private companies. So basically what that looks like is opening up a whole new universe of investors who could be users or customers for a company who previously would not have been able to invest in a company before it went public, right? In the past, if you're a startup, you're either bootstrapping, you're talking to VC, or you're talking to angel investors. All of those are, both of those other types of funding have specific things they're looking for that doesn't work for every funding model. And we provide an alternative to that. You can raise up to $5 million. People can invest as little as $100, and if accredited investors can invest as well. So there's no limit actually to what an individual can invest. And we're here to just help founders make their dreams come true. We're a public benefit corporation. Our mission is to democratize access to capital. So we are working in Nashville, on the coast, but also in other communities to make sure that founders everywhere have a chance to raise money to bring their vision to life.
Awesome. I know, Jorge, you're a team of 1, but tell us a little bit about what you do.
Yeah. So, good evening, everybody. Thanks for coming, by the way. It's great. My name is Jorge Titinger. I am, newish to Nashville. I've been here a little over 2 years. I moved from Silicon Valley, where I was in the tech industry. I was CEO for 15 years there of publicly traded companies. I now have a consulting firm, working mostly with CEOs and boards on strategy and how to make human capital a competitive advantage in the companies. And I also do a lot of work both here now, and then I was born and raised in Peru, so also with Peru, with the startup community there. So I'm on the board of the Nashville Entrepreneur Center. I'm a mentor to a couple of companies there. I have 3 companies in Peru that I'm mentoring, and then I invest, mostly through funds, where I'm a limited partner in 3 funds, and in the LPAC of 1 fund. People know what the difference is. The LPAC, you basically have a say. If you're an LP, you just give them money and they invest. But in the LPAC, you opine. We're focused. My main focus is tech, because it's what I know. There's actually a great amount of tech coming here. And I also wrote a book. I think actually we interviewed your CEO for that book. The book is called Differences That Make a Difference. And it's about how diversity and inclusion help produce great results for companies. Happy to say we won the top current affairs book of 2020 with that. So pretty cool. So I spend a lot of time trying to inculcate in founders how to really start their companies diverse by design. Way there. And that's it.
Awesome.
Yeah,
Just that.
just that.
Cool. My name is Alana Mann. I'm a principal at Cultivation Capital. We're an early stage venture fund. We have several different investment focuses. So we have teams that invest in healthcare, life sciences, agriculture tech. We have a team that just launched geospatial tech. We also have an earlier seed stage vehicle called Spirit of St. Louis. And then I spend all my time on the tech funds team, which is really focused on enterprise SaaS, which is basically anything with a recurring business model, selling into B2B, and that has a truly recurring revenue streams. And then we like to say we come in at the early Series A. So for us, that means a little bit after seed in terms of revenue traction and kind of early revenue milestones. And usually our first check into a company might be anywhere from 2 to 3 million.
Perfect. Now, I'd love to hear a little bit about how, again, you guys are all representing these different funding mechanisms. How is it that you connect with founders, you meet with founders, and then sort of attract them to come really work with you?
I mean, I think for us at Wefunder, it works in several different ways. There's a few kind of different archetypes of the company that we will work with. It's a really exciting development in equity crowdfunding now that we're seeing more established companies wanting to do what we call a community round, and so that's a company that they don't need to crowdfund. They see the value of engaging their community, their users, their customers, and turning them into investors, and offering them the opportunity to maybe invest alongside VC or the other money that they're bringing in. The best example of that would be like Mercury Bank, which they opened up they're a company that raised a Series B at a $1.6 billion valuation. They raised $120 million with Andreessen Horowitz backing and some other VC. But then they opened up a $5 million allocation for their customers so that for the first time, those customers could invest alongside those VC firms. That's a really unique opportunity for someone who's just got a bank an account at this bank. So that's a really exciting development in our space. But I think the more common model is a company that has a little bit of traction. They're coming to us because they're talking to early stage VC or they're talking to angel investors, but they either see the value in demonstrating the buy-in of their community or want to fill out a round, bring in some smaller checks to fill out a round. The average round on Wefunder is about $350,000, maybe $400,000. You can raise up to $5 million annually, though. And we really we are a marketplace, right? So you can come to us, you can set up your own campaign, and then we're going to offer you our expertise to help you kind of maximize what you can do on the platform, But it's crowdfunding, right? Like if you're not able to raise money from angel investors off of Wefunder, it's unlikely that you're going to really find that much success there. But what we do is offer you a way to amplify that. And so what we like to say is you can raise more money faster, right? You're taking little checks, and the guys that could just invest $500, someone who might buy your product, but then invest another $100 in your company, can invest alongside those people. So it's an amplification tool and a customer engagement tool.
I love that example of Mercury Bank too. Okay, Jorge, now you're on the spot where you have to talk about who you talk to, and now I want an example of maybe a company that you worked really well with, was a great fit, and why that was so.
So, you know, in my world, it's all about the network. All about the network. You know, there's a whole bunch of angel networks. You know, I went to university at Stanford, and Stanford has a big angel network full of investors. Deals come in to be looked at by the group, right? And then with the funds that I invest with, again, it's all about deal flow. So we look at 6 to 7 opportunities a week. I have the ability to invest my own money on top of what the fund might want to invest. So I get to look at things that otherwise I probably wouldn't have access to. And for me, you know, I typically invest in where I know the space to some extent, because I truly believe to do well, you need to have both operating expertise and investment expertise. And like everything, you're gonna make mistakes at the beginning, make some bad investments, and hopefully you start learning how to really, you know, go through the process. There's a company that I love to talk about. It's called Transparent Business. I was actually the first investor. They're the first pink unicorn. You know, the CEO is a woman.
Really?
And now they're, you know, I think their valuation right now is somewhere around $3 billion. You know, I was their first investor. I was an advisor for years, and they have probably the best remote working tool for me in the industry. So the pandemic helped them a lot, as you can imagine. Right? So it's all about the transparency of how people work, and I really helped them kind of figure out how to market it. So they have different products that they offer. One of them is called She Works, where they have a database of tens of thousands of women, and everybody who says there's not enough women to hire in tech is BS. You're just not looking in the right places. They have thousands of women that you can hire through them. Then there's another offer that's for veterans that are incredibly capable, but they maybe cannot get to an office, right? So they can work remotely with full transparency. So they're doing great. Hopefully they go public this year. We'll see. But that was a great company to work with. And I met the founder. I was very involved with the Hispanic community in Silicon Valley. And the woman, she's from Argentina. So I met her through that and then helped her with the company. And it's terrific. So that was one of the good ones.
I love it. Pink unicorn. I haven't heard that
I've
before.
never heard that before either.
It's good. It's true. They exist. I've seen one.
Okay, cool. So definitely on the VC side, I'd say sourcing is quite different. So sourcing is really about the numbers game of it. So like we'll probably look at, I'd say collectively as a fund looked at 1,000 deals last year and made 3 new investments.
Wow.
And that's probably like, you know, most people probably say that seems even like more bullish than industry norm, which is closer to like 1% of the deals that you'll end up doing. So I think the biggest piece is like, you know, constantly making sure you have a really diverse pipeline of deals, being able to, you know, empathize with founders and build strong relationships early in the process is how you can really, you know, differentiate yourself as an investor at a fund, because there are thousands of funds now, capital is everywhere, and so it's really more so about like how can you really help founders and prioritize that relationship with founders early in the process so that they actually want to take your check, which is, you know, a lot of people who have been in the industry longer, like, this is the hardest time to be in VC because it's so competitive. And so I think a big part is really like leaning into founder empathy, I have the experience of having been a founder, so being able to relate to the founder experience, I think, is definitely a big part of that. Not a lot of VCs have been on the other side of the table and understand the struggles that come with that. And then I think the second half of the question is like, what is a great example of a deal I sourced and company that I really enjoy working with? And it's kind of funny, I did not time it as such, but it did just get announced today. The company's called Chatdesk, and essentially they're really focused on scaling customer support for D2C and e-commerce brands. They'll obviously expand to other verticals, but it's been really sticky with people who want to just work in the gig economy and make anywhere up to $15 an hour to just kind of vote up or vote down on these AI-generated responses to customer questions that come in. And it's been really cool to watch the company evolve and grow. But again, going back to like, how did I source it? It was really prioritizing building trust with them early in the process. And a lot of times I remember when I sourced that deal, like collectively all of our partnership was like, we're not gonna win that deal. Like that deal's gonna be too competitive. Like we have no shot. And so I just kept being resilient, focusing on the founder relationship, helping them with customer intros is a huge one. Especially in the world of enterprise SaaS, some of these sales cycles can be really slow. Some of them can be really fast. If it's a really quick sales cycle, then again, now it's a numbers game. It's not just helping them get one big customer. It's now helping them get a lot of sales velocity. And then also, that was a cool example because I also was able to help them with intros to other funds. So it's really great in the world of sourcing if you're able to build relationships with other VCs who are like, everyone says, oh, let's do a deal together this year, but like being able to follow up on that and being like, oh yeah, like, this is a deal that we can do together, and knowing that that's another fund that is aligned on values, aligned on kind of their approach to supporting founders, being super operational because, these early stage startup teams need operational support. It's not always just founders calling for like intros to fundraising. It could be founders trying to build out their sales team, trying to figure out who they should hire next. What should the candidate profile or background look of the person who they should hire next? And so I think all of those things, it's been really cool to help them and see how they grow and evolve. And, obviously it's one we're really excited about, just got announced today. So I'd say definitely my favorite in our portfolio.
And what I love about
Chatdesk.
what you said, sorry, I'm adding myself as a panelist now, is that there's such a disconnect between the VCs and the founders, where I think Nashville founders are such like a scarcity mindset of like, there's not enough capital out there for me to raise. And really there's so many new VCs in town like yourself who are like, no, listen, like we want to invest in a good deal that sort of fits our niche of where we work best. Like all these VCs you're working hard every day finding these deals, finding those companies that are really perfect for you to work with. And I definitely think Nashville is still catching up of, okay, people want to give us money and invest in what we're doing. Like, we don't have to fight for it. It's finding maybe that right person and that right fit.
Well, I mean, like Jorge's moving here. You're an example of a VC fund that has a presence here now. Wefunder's second office is here in Nashville, and it's, the way my previous title at Wefunder was Nashville City Lead. I was really focused on just Nashville, and I'm going to remain focused on Nashville. But it's like, in my mind, you talk to investors here, and there's been a model that worked for the investor here in Nashville for a long time, right? If they knew the right people, they knew the right healthcare company, they knew the right logistics company, there wasn't a need to look out further. And I really see what a role that Wefunder can play here is, like, it's obvious to me that there is talent and there are good ideas and of a more diverse variety here. And it's really like, we can help kind of turn the ear of investors or kind of change the orientation of the culture of investing here. Because it's not that there's not talent, it's not that there's not ideas, and it's not that there's not capital. It's just that the capital is trained to look in certain places. So we kind of I personally want to kind of break that paradigm. And these guys are an example of how that is starting to break.
But yeah, for me, so I spent 39 years in Silicon Valley, right? Where the number of startups that are here, which I think right now is somewhere around 1,100, which is not a bad number. You get that every day, new ones in Silicon Valley. And what I have found is there's plenty of money. There's plenty of great ideas, and the two don't know how to find each other. So like you're saying, the investors don't know where to go to find startups that they want to go and look at and invest in. By the way, there's always exceptions to the rules. You know, current company excluded from that comment. And then the founders don't know where to go to get money, right? And so that's changing, and I think groups like this, you know, when I said network. Groups like this, you know, like I said, I'm on the board of the Entrepreneur Center, the EO group, the Entrepreneurs Organization, etc. Those are crucial to go drive that change. And the second thing is the investors here need to be educated on how to invest in startups. Because when I first came, I think I met like 40 people claimed they were investors. And I said, how do you measure a startup? And they said, return on invested assets. I'm like, can you say that again? You know, what return? I said, these companies, many of them don't even have, they just have a product. They have a business plan that in many cases is not a business plan, it's just an idea. And you're expecting returns, you need to change the way you're measuring them. Because the moment you start trying to measure returns, you're gonna kill that startup. You know, they're gonna stop being innovative, they're gonna stop being creative, they're gonna focus on the wrong things. So I think there's an evolution, and I think we're actually moving quickly towards being, you know, efficient ecosystem for startups, but we're not there. As I said, you know, I do this also in Peru, and Peru is kind of at the same stage that Nashville is. You know, lots of great ideas, plenty of money. They don't know how to find each other yet. So that's something that needs to be fixed. You're absolutely right. I mean, you know, there's different vehicles for investment, right? So it needs to be across the board.
I think another part of that is like also the culture of VC historically not been super accessible, and I feel like I mean generally, and so I think especially, you know, Nashville being a smaller market, you feel that just a bit harder, and so I would encourage you all to try to like build a relationship with VCs like earlier than when you need a check. I always tell people, like, some people might not, some VCs will respond well to that, some might not. But no, like, I am an example of someone who, you know, always will take a meeting, always will take a pitch. And the reason why we like to meet with founders earlier than when they're just raising is then we can kind of maybe receive your investor updates, maybe we can track your growth. And so we have this kind of longer history and data points around who you are, how you've executed on the milestones that you said you would hit, how you maybe exceeded those expectations, and so then it's a lot easier for us to, you know, advocate as a group, because, you know, funds are basically partnerships, right? It's not just me writing the check. We're trying to strive towards consensus, which, you know, we can get into if that's problematic or not another time. But, you know, historically, on our fund, we really do try and get as many people from the partnership on board with the deal, and getting to that place requires a lot of data. It requires a clean data room that, you know, you can't just come up with overnight before a coffee meeting. And so I think like really being data driven, being really excited about reaching out, because even just like a fundraising process, it's very similar to sales. And some of the best founders, especially in the enterprise SaaS space, are sales leaders. And if I'm on the receiving end of that, I'm like, oh, this person is on top of it, like they're managing their investor pipeline really well. You'd be shocked if that person wasn't really executing from a sales perspective in a really strong, top outperforming way. So I think that's another really good thing I always encourage founders to do as well. Like, figure out which VCs are open to a cold email and email them. Get on their calendar. Find ways to maybe meet them for a quick coffee. If there's like big milestones that you want to share via email, or even if you have just like bullets outlining what's happened the past few months, include that in the email so they have context. So many times people reach out to me asking for coffee and not even really ask for coffee. They're kind of just sending a blanket, my name is so-and-so, like, it is a very competitive market. Do what you can to stand out, but also know there are people on the receiving end who want to hear from you. And so you should be encouraged that there are people trying to make VC more accessible, more inclusive, and that's something to be excited about.
And going off of that, for all any of you, what are the most common problems or red flags, when someone just sends you this cold email that you were approached with of people saying, all right, I'm ready to raise money, and what are those problems, and maybe what would your advice be to better prepare for folks who are making those mistakes?
I mean, I think it's funny you were talking about someone who's executing on a sales pipeline. That's a skill set you would identify as a VC. I think running a campaign on Wefunder is like running a marketing campaign, right? You're going to be executing on the same type of consistent communication with the people that you're reaching out to. And so oftentimes, people reach out all the time and they want to raise money. They think, I'm going to set up a deal on Wefunder and money is just going to start flowing in. It's not a magical pipeline, not a magical tap that you can turn on, right? Good things happen when you do good things well, and things build from there. And if I have a call with someone, and then we meet, and then we follow up, but none of the things that we talked about are happening without me kind of prompting or describing what needs to happen next. The best sign is someone who's breaking everything, going into the Wefunder back end and trying to set things up. That's someone who's trying to learn and trying to figure it out. And I and our Wefunder team can coach you on how to use the tool, right? It is a tool, but if you're ready and energetic and ready to go, I know that you're gonna go be able to find 1,000 people to put eyeballs on your Wefunder campaign. It doesn't mean you're gonna raise $1 million. It means you'll probably be able to get a base of people to start looking at your deal. And if you've got a good deal, then you might be able to raise $1 million. But it's just that energy and willingness to go and execute and learn is I think the best sign of someone who's going to be successful on Wefunder.
So I'll add a few things. When I look at deals, there's a number of things I look at, right? And so the first one is, what are you trying to solve, right? And does that need solving? There's some great ideas that you go, okay, well, the world doesn't really need this, but they've been really successful, like the pet rock, for example. How many people know what the pet rock was? Whoever invented it made millions. It was a little rock that painted lips and put 2 eyes and sold millions of them. One of those that I don't think the world needed, but they made a lot of money.
You turned him down.
I did. But so I look for that, right? Then I look, can they differentiate from others, right? Because if there's a real problem, guess what? There's going to be many people trying to solve it, right? So is this particular deal one that's differentiated from the competition? And then can they actually have barriers to entry? Can they build barriers to entry? Otherwise, it's, the moment somebody starts making money, guess what? A lot of people are going to try to get into the same market. So I look for those 3 things, and then, but most importantly, like you said, the enthusiasm of the founder, of the entrepreneur. Are they passionate about this thing? Because a lot of times I'll invest on the person because their idea might be good, but not work. But they'll have another idea that might work, right? And so I've invested in a particular person 3 times, and the first 2 startups didn't go anywhere. The third one's doing really well, right? Because I believe that person is going to be successful at some point. But, so the deals that are bad to me are ones where there's no real understanding of the market they're trying to get into. It's a solution that anybody can copy. So why is that going to command a premium on price or whatever? And the third one is these people were just kind of trying, right? Not fully committed to the idea. So I look for those things to decide whether this is a good investment. And then, like I said, for me personally, so I'll advise the funds a little differently than whether I actually open my wallet or not. For me, I need to understand the space, right? So, I don't invest in consumer products, for example. Because I mean, other than as a consumer, I don't know it, right, from a business perspective. But focus. How many people here are actually entrepreneurs who are starting companies? Yeah. So focus.
Hopefully a good number.
Yeah, great. But so really, it's think about how is your solution different, right? Or how can you defend it in a way that is difficult for somebody else to just come in and do exactly what you're doing and just change a little bit of something, and maybe they were better connected, more money, etc., and then they outpaced you. So that to me is really critical to see whether it's a worth the investment or not. So
Cool. So it sounds like the first half of the question is like, what are red flags when people are reaching out, entrepreneurs reaching out to me? I think probably the biggest red flag, is really if people are unclear kind of on the market, or, founder market fit can come in a few ways. You could have been maybe a customer at an enterprise company that was buying similar software, and so you have the insight of like deep understanding of the customer journey, or maybe you're a founder that's worked and has deep domain expertise in that space. But like if there's no like founder market fit, it's really hard to get to understand like how does this person feel uniquely positioned to win in this space and become not just a thought leader, but an entrepreneur at a market leading company in this space. So I would say like biggest red flag, if I just randomly was like, I'm gonna start a kombucha company, like I wouldn't invest in me. Like I maybe have had kombucha 3 times, And so I think that's a big one. Another red flag might be if there's been a lot of turnover in the company, or there's potentially bad blood between a previous founder who left, because really at the early stages, team is a critical part of the success of the company, and so that entails your ability to recruit, but also your ability to retain and keep people incentivized and motivated and have deep belief in your vision for the future of not just this company, but of this market and what this company could be at scale. And then I think probably like the third red flag might be a lot of times founders might not be good at fundraising, and in the world of VC, that's a really hard truth. Like if you know that you're someone who's not good at fundraising, you need to find someone on your team who can then lead the process, because the ability to fundraise is really how VCs are able to measure their core metrics, right? Like as an LP, like you're looking at all of the fund's metrics, which are really generated by this founder's ability to fundraise. So we can't invest in a founder who's like, I never want to fundraise again, or who doesn't want to take investor pitches or build relationships with investors at the later stages, because we have to ensure that we are going to be able to exceed metrics and generate top returns for our limited partners. And then I think the second half of that question is like, okay, like what core traits do I really look for? And so I think, obviously founder market fit is a really big one in enterprise software, where things are not always very differentiated and things are not always super defensible in the beginning, because you're getting to that stage where you're starting to identify product market fit, but you still don't know at scale what this product and this company could be. You're still just getting those early repetitions in and starting to build out what looks like sales repeatability. So I think that's like a really sticky one. Like how well does this founder know the market? Do they have a unique view of what the market could be, right? Like no one wants a founder who's like, okay, the market's gonna be like this until like the next 20 plus years, right? Like we're investing in innovation, and we have to have confidence that this founder has a unique view of how the industry will change and how they'll react to that change. So I think like really like important soft skills to demonstrate as a founder is like adaptability. Coachability is a big one, especially if you're a first-time founder. You don't want to come off as a jerk or someone who can't take feedback, because again, like, and chances are if you can't take feedback well, you're not going to fundraise well. It kind of goes hand in hand. And I think the other big one that we always look for, and I know I always try to look for, is founders that are really strong sales leaders and can really not just build a really strong sales team, but can build out repeatability of what the sales functionality should look like. So how can they, maybe find a sales cycle that they can shorten, or how do they have quick hacks about how they can constantly improve and strive for like that uniqueness that becomes, at scale a unicorn, because it doesn't come from people who don't care about sales. you could be the most product focused person, but like sales is like a core part of the early like stage where we come in. And so we really like to see someone who's passionate about sales, or at least has a sales champion kind of in that core team who's going to really guide the path to scalability.
And you invest in Series A, you said?
Mm-hmm.
And then bringing it back to talk a little bit about like Nashville specifically, maybe what's your take on sort of our current funding ecosystem, and what do you think we could do better? How could it be improved?
You guys might have better ideas about that than I do. I think, Wefunder is here to help people connect, and we're you want to talk to me about using Wefunder, I'm happy to talk, and I'll connect you to angel investors or VC. Like, I think that I talk about it in terms of like connective tissue, right? There's so many new people coming to town. There is an investor base here that has plenty of money, but is trained to think about specific things. The way that starts changing when we are just increasing the number of connections that are happening. And I think that will accelerate the flow of capital, that will accelerate the success of all of the different funding models that we have. And so I just think that we need more of Zap. We need more of just people.
I'm very tired.
But we need more people just bringing energy to the space, and just passion to it. Like, I love the part of my job that is talking to people about what they're trying to build, the problem they're trying to solve, and Wefunder is a very flexible platform, right? I will help everybody get their campaign set up. Doesn't mean that everyone's going to be successful, but we're here to help and offer what expertise we can. And I think that building that culture is what helps us all, kind of raises all boats.
Yeah, I think I said a bunch about my assessment of the ecosystem here, where the money and the startup don't know where each other is. So I think continuing to build those bridges, I love the way you're calling connective tissue there between where the money exists and where it needs to go. But I also think we need examples of successes. Like for example, I have in 2 years never heard of a Nashville unicorn. I guarantee you there probably are. There's probably some incredibly successful companies that were invested in, had a great exit, either had an IPO, got sold, etc. But we don't hear about it.
There's only 3, just so not
well,
that many.
but 3 is better than 0.
That's
right?
true.
And you need to start somewhere, right? And so, for example, those companies ought to be talked about all the time, right? And I think that generates more enthusiasm. Again, the investors need to learn how to invest in startups, right? They need to learn that, by the way, it's not just one check, right? And by the way, I think founders also need to learn you're going to raise money several times, so you need to be very careful with your cap table and how you manage that, because you could end up owning less than 10% of your company, and that's not a good thing. But investor needs to know you're going to put in a little bit of money now, then sometime later, et cetera, and understand dilution and all those things. They're used to investing in big companies, in real estate, in healthcare. That people who are investing in HCA, you measure that very differently, right? I mean, investing in HCA basically means you buy their stock, right, in the market. But I think those things. So it's partly education, partly networking, partly connecting everybody, so that the ecosystem truly functions as an organism. And we're not there yet, but we're heading there. I think fast, which is great. There's a lot of Silicon Valley people moving here, hopefully for the right reasons. I know there's a lot of suspicion. I don't want California politics here, neither do I, by the way, that's why I left. But a lot of them are coming from backgrounds that are much more used to investing in startups. The risk-taking. People asked me once, what's different about Silicon Valley that you don't see anywhere else in the world? And my answer was, if you haven't failed, there's something wrong with you, right? Well, in most places in the world, if you failed, you get this stigma about, it didn't work out, right? If you haven't had try a 2-3 startups that fail, I don't, a lot of investors won't give you money. You haven't learned, what the potholes on the road are, et cetera, et cetera. So we also need to develop as a city, as a state, that tolerance for higher risk, and with higher risk comes a higher percentage of failures. But the wins are huge. Right? So I think that needs to happen.
I love that.
No, yeah, that definitely resonates a lot with me. I think the risk profile of kind of the original investors in town were a little bit more true kind of private equity in terms of approach, which is very different than true kind of early stage where it's like, people on our team are trying to look at 1,000 deals a year versus, he might do 1 deal a year, right? Or just look at even just 1 deal, maybe that someone sent them via email, as opposed to like really outbound specific sourcing. But in terms of Nashville, I think it's still very early in terms of what the ecosystem will look like and evolve to be. And so I think the biggest thing that I'd like to see more is like, how can we build more organic conversations? I moved here from New York, and in New York, you could literally like walk around and see like 5 VCs. You could in like 30 minutes, or you could talk with someone about a deal like literally at an event, or these kind of massive AWS loft events that they just kept doing and doing and doing. And it was really good networking. And I think Nashville is starting to tap into what that network will look like. But I just think it's like very early stages. And so, yeah, I think events like this are a great way to, network with angel investors, network with people at VC funds. But yeah, I think until there's more community building and kind of understanding of, again, like appetite for risk is really difficult. Like it's really hard to like take the leap of faith of being an entrepreneur full time, right? And so I see a lot of times people who might be dancing on the line of being at a larger company, interested in entrepreneurship, but not really taking the leap of faith because they're not ready to take on the risk of that. And I'm hopeful and optimistic that once there's more of these events, you start seeing the founder ecosystem evolve and develop and know that there's capital in town, that will fuel people to take kind of that bigger leap of faith. But I think right now it's just kind of the early stages of people, there's discomfort in the startup world. It is high risk. Like most of the companies will fail, more than most, right? And so being on the other side of that as someone working at Google or Amazon, like, yeah, I don't blame them for not taking the leap of faith, but hopefully Nashville gets to a place where they're excited to do so and they feel that they could be supported here locally. And capital is a great way to support founders, but there's other ways around team. Like, is there local talent? What is, these larger companies coming? Like, are they going to facilitate, more in local events so that people can get more associated with angel investing or comfortable with that, right? And so finding ways to incentivize more people to angel invest is also a big part of building out the Nashville ecosystem.
The one thing I think that is Nashville that's going for it is it's growing, right? I mean, if the city was shrinking, the investment in the world would just collapse, right? So it's growing, and it's growing in multiple industries at the same time. So that's great for a variety of startups in multiple industries. And then I think the education system, I don't know how many universities there are, but it's a ton for a city this size. And so that produces human capital to go populate the startups that you might not have in other places. So those are all great things. I think it's just, how do we shepherd to continue to grow faster? It would be my hope. Right? So.
And just for folks to know, so I think you guys mentioned a little bit of, it's been a lot of healthcare tech, but there's actually only been 3 recent unicorns in Nashville, which is Built, which is property tech, maybe fintech you could say, Smile Direct Club, the whatever they are, the bracelet things.
But they moved here once they were already there.
Very true, yeah. And then Silicon Ranch, which is an energy tech company by the governor, I'm pretty sure.
Former governor.
But none of them are in health tech, which is very interesting. Anyways, I'd love to sort of open it up to audience Q&A if anyone wants to volunteer and raise their hand. Miss Catherine?
Well, one, I think we all have come to the consensus that we need more SAPs as community builders and hosting events like that, like this. But you guys both brought up a really interesting point about, you said you personally don't invest in companies that you don't have expertise in. And talking about that. What if you're on the other side? What if you're an entrepreneur and you have a startup, and let's say your startup is kombucha, and there's a VC fund or an investor that says, hey, I'm going to write you a check, for X amount of dollars. Should you take that check even if that person has no experience in that space, or should you, really consider not taking that?
Great question, by the way. It depends. Right? And so what you don't want is take that check and have that person on the phone with you 50 times a day checking up on you. So if they're going to be a silent investor and let you run the company and trust that you have the right advice around the kombucha business, then take the check. If they're going to be in your shorts, I would not. They make your life miserable. So be mindful of who's actually putting money in your company. You mentioned that getting to the right investments is very competitive, right? It's chances are somebody else will also want to invest. That might be a much better fit, personality-wise, than that particular investor. But remember, your goal is to raise enough money to actually fulfill the idea or the dream that you have for your company, right? So the money is equally green if it comes from me or him, but you want to make sure that the relationship is one that's healthy, not harmful. Healthy, harmful. Just kidding.
Well, so I think there's an interesting point there, right? Like one of the things that we're a crowdfunding website, right? Well, if you talk to a lot of institutional investors, they'll say, like, why would you take, dumb money from 1,000 people, right? They'll describe, but it's important to understand, someone who sees themselves as an angel investor but doesn't know your space and might bother you all day long versus 1,000 retail people who believe in your retail customers who believe in your product. And I think this is a fear that we find from founders all the time. It's like, are we going to have 1,000 $100 investors who expect to be treated like $50,000 investors? And the reality is no. And there's different value there, right? Having those 1,000 investors who can go, you can ask them to, what do you think of this flavor? And they're kind of a built-in polling mechanism. Or, look, we're about to launch in Pittsburgh. Like, who's got a friend in Pittsburgh? Then you're able to crowdfund different value. But I would agree with him completely, like with Jorge completely. Like those checks, I think one of the biggest mistakes of someone raising crowdfunding money is not understanding how they're going to use those investors once you have them, right? They might bother you if you don't communicate with them and you don't ask questions of them and ask them for feedback. But if you use them as an asset, then they could be your $100 check writers can become the most valuable investors you have.
Question for you that's unique to you. How should women position their pitches and handle themselves? I mean, as much as we'd like to say, hey, it's an equal playing field, it's all equal, how should they act or not act or be different? Like, what can they use in the boardroom with a male-dominated industry?
Yeah, of course. But I was actually going to add a bit more to that first question, just to give a VC perspective. So all funds are structured very differently. At Cultivation, we like to lead on our team. So we've led on the tech fund side 90% of the time, which is kind of a big deal, because if you're leading around, that means you're basically saying, I'm in the trenches with you. I'm your partner. I'm going to be maybe on the board and really taking accountability for the success of this company alongside the founders. And so I think really to your question, it's kind of understanding two aspects. One, the first is like, how involved does this person want to be? Because if it's someone who wants to lead the round and is saying, you know what, I'm going to put in over 50% of the round, I would want that person to have strong domain expertise, and especially knowing that this is someone who's going to be on the board for a long period of time, or at least until you get to a later stage of the company. You want it to be someone that you really like as a person as well, and that you trust, that you value their opinion, and you have confidence and conviction in their ability to help you scale the company. So I think that is really, really crucial if the person's leading. But if it is, potentially an angel investor, someone who's putting in a smaller check size, I think, they're not going to be probably involved. It could be an angel investor invest in like 10 deals a year that you might not ever hear from. And so it definitely depends on kind of what the structure of the round looks like and what your expectations of that person should be. But you should feel comfortable owning and driving what that conversation looks like, and knowing that, this is your company, this is your fundraising round. Run it like a process as you would like onboarding a new person on your team, or reaching out to a high enterprise sales process, right? Like run it like tight like a process, and you'll start to see that VCs will respect that you have the power in today's capital markets, and they'll probably be pretty go along with whatever you're thinking in terms of vision of what the round itself should look like. And then on your other question around how should female founders present themselves, I think pitching is like more art than science, and the unfortunate truth of that means that there's a ton of investors who are still kind of investing off of like gut fit as opposed to being super data driven. And the problem with that is if you're trusting your gut, and your gut has been like if you're trusting your gut, and historically it's been investing in white males the last 30 years, probably that VC is not going to change. But like you can find people on Twitter or whoever that are saying, I want to be data driven, I want to invest in more female founders. I have friends who are emerging fund managers that are solely focused on investing in more diversity, investing in more female founders, building out ecosystems for female founders. And that's important work that people are actively doing. I spend a lot of time mentoring female founders, building out programs specifically so female founders can have peer-to-peer mentorship. And there's lots of people doing the same so that we can improve the metrics around what funding looks like to women. But I think it's not going to change until more people are data-driven, and the unfortunate reality is not everyone is. So find the people who are, let those people be an advocate for you. There's a ton of times that, a deal might have been too early for us, and it's been a female founder that I've made a ton of intros to. Not all VCs will do that, but you have to kind of do the work to find the people who will. And once you find the people who will, they'll probably be an advocate for you. Like there's some people who will be even earlier than pre-seed, and they're sending me monthly investor update emails. And I read them, and it's like, I can't say that we'll invest in them ever, but we might. The only way that I'll know that we will is if I read the emails. So it's kind of like find those people who will read the investor update emails, put in the time to do them, put in the diligence to make sure they're concise to the point and have like really important metrics and KPIs. Like don't send over investor update emails that are just words. People are scanning them, know that they need to be data driven, they need to have important metrics. And then I think the biggest part is like prioritizing relationships with the people who are data driven, who are saying like with the megaphone, we want to invest in more female founders. And then the people who are, maybe hiding in the corner, investing off of deals they get on the golf course, just let them keep doing their thing, and don't sweat them. Don't prioritize them if they're not going to prioritize you.
That's part. This is part of the mission of Wefunder. The numbers for both women, founders of color, founders away from the coasts are really striking, right? Like I think it's 77% of VC investment goes to New York and California. It's wild. 2-3% goes to women, 1% goes to founders of color. This is something that Wefunder we haven't solved the problem, but our numbers are a lot better than that, and we're working to really our team is very oriented toward making an impact there. This is kind of what we're trying to do, to say like, look, if we open up, if we give someone an opportunity, like we're providing the marketplace, but if someone has the opportunity to go talk to people and convince people, like the numbers start to level out. And I think that's part of, when you start to build those metrics, that's part of where people will start to realize that, like, you know, the economics make sense here, right? People are passing on investing in really talented female founders every day because they're comfortable investing in people that look more like me. And there's no like silver bullet there. It's just like really grinding on that, I think.
And I wish we had a limited amount of time, but let me just take one more question and then we'll network. Miss Tina?
This might be kind of an in the weeds question, but it's a constant battle in my head. So I am fundraising for a second company now. My first company kind of stalled, so now I'm working on another one. I come from a sales background. I've been doing sales for 15 years, plus marketing and strategic partnerships. I'm really big on strategy, do tons of business cases all the time. But when it comes to the fundraising, I constantly am back and forth. Well, do I set up that meeting and have the meeting if my deck isn't done yet? Because they're gonna, I know at the end they're gonna say, well, send me something on it. And if I might know some of the numbers and I might know the questions that they're gonna ask and I can answer them, but if I don't have like an actual document to use at the time, do I wait until I have that, or do I, like, what do I do?
I'll take that one. I personally like to go through the deck during the first intro meeting. And maybe this is specific to me, but usually chances are I could be on 10 pitches a day. And if I don't have something to look at, I'm probably going to be looking at my email. And I know it sounds bad, but I'm also getting hundreds of emails a day. So it's kind of like the visual and someone talking me through it ensures that I'll spend more time on it. And then something else I always tell people is, like, most times VCs spend like less than a minute on a deck via email that's received. And I know that sounds really bad, but again, like, go back to that example. Let's say you've received 30 decks a day. You don't really have time to spend 30 minutes on each. So like, if you have a meeting with me and it's a 30-minute intro call, now you're getting 30 minutes where we're going through your deck. Like, I kind of just tell people that to like stack it up against the fact that, you know, we're looking at hundreds and hundreds of companies. Yeah. So it's kind of really pivotal that even in a first call, you have something that can showcase, okay, literally this is line of sight of venture capitalists like reading your deck and you're walking them through it so that they can give active and real-time feedback. But yeah, I mean, I think if you don't go through it, just make sure you're really clear in terms of overview. You'd be surprised, some of the best sales leaders, without like a deck or overview, you end up rambling. And like, rambling is the one thing that can kind of be like the death nail of a pitch. Because especially over Zoom, right? We're not in person and you're not just having an organic conversation. We're looking at a screen. And in some cases, you're looking at a screen 12 hours a day. So there's going to be some sort of brain fog that happens if you're on back-to-back pitches. So yeah, I would say definitely try to have a deck. Even if you could send it in advance, a lot of times I probably won't do an intro call until I've looked at the deck before. And I think most people will want to see something before taking an intro call, especially if it's through like a cold email. Because so many times what you'll find through the deck is it might not be a fit because of investment thesis. I think what's really specific to funds, and people don't always realize this, but I can't just invest in whatever I want. Like, I can't be like, oh, I'm going to invest in this consumer company. The founder is great. They have great metrics. Like, we're investing on behalf of limited partners, and we tell them every time we raise a new fund, hey, we're allocating, $50 million to investing in enterprise SaaS. So like, we can't just invest in a random ag tech deal out of our enterprise SaaS fund. So I think that's another important reason why having a deck in advance is really crucial.
You said two things that I want to comment on. One is that, like, that number of 1 minute, I think I see so many decks that like cannot be digested in anywhere near 1 minute. I think that's just an important point to make, right? Like, you get decks, sometimes I've seen decks that are 40 slides long, and it's like 100, 200 words a slide. And it's like, I mean, like, it'll take me 30 minutes to read through that. Just keeping that in mind as you're developing a deck, that like, yeah, there needs to be information that I've gained from this in 30 to 30 seconds to a minute. Don't get the words out of there. The words are what you're going to say when you're on the call. The second thing I'd say is that Wefunder's a little bit different in that we function differently. Our incentives are a little bit different. Like with us, like don't send me a 40 slide deck with a bunch of words on it. But if you're looking for feedback on a deck, we're happy to provide it, right? I'm here to help. We actually do the work of helping people set up their campaign pages on Wefunder. So if your deck isn't perfect, don't be afraid to send it to us. We are a resource first. And if you've got a great deck, I might end up sending it to Alana. But I would just say there are people out there that will help. It doesn't need to be perfect. Just be ready for someone to say, this slide sucks, or can you make this more clear to me?
Yeah. There's two types of investments that, for example, from my vantage point, right, what I call BFC, which is better, faster, cheaper, right, and then Brave New World, right, true innovation, and your plan needs to have the possibility, if you're a BFC type of plan, of returning between 5 to 7x the investment in 5 to 7 years. And if you're Brave New World, because the risk is much higher, you have to have the possibility of returning 10x, right? So a 25 to 30 IRR or a 35 to 40 IRR. Otherwise, people are not going to be interested. And so, if like this 1 minute thing, I spend a little more time because I get much fewer than these guys. But I will look at, does it, you're going to build a, revenue growth plan, etc. Does that get me to 7x or 10x? If the answer is no, and by the way, it's no guarantee that I'll get there, right? But if it isn't at least possible, right? Next. So put those numbers up front, and all that the investor is going to talk to you about is what assumptions are you making to get there, right? And you can defend your assumptions. For example, a certain inflation rate, a certain change in interest, or population growth, or whatever it is that's going to grow your market. Those are the kinds of things that you're going to get to talk about. But get your numbers out in front that show a possibility of a really successful investment return. Otherwise, I think people are probably going to be very skeptical.
All right, final question. After this, how can founders and startups work with you?
I'm easy. Just send me an email. If it's not me, I'll find someone on the team that's interested in what you're working on. Read read.ezell, Ezell at wefunder.com. I'm easy to schedule time with. Particularly in Nashville right now, for what we're doing, I am directly incentivized to make sure that what my goal is to make Nashville the most equity crowdfunded city in the country. We're way behind San Francisco right now. So let's go.
People are leaving, so you have the advantage of growth or shrink.
But yeah, just reach out to me, and if you got a specific question, I'm happy to answer it. If you got a deck you want me to look at, I'll look at it. I'll schedule 15 or 30 minutes to talk to basically anybody. I love talking to people.
With me, I have a bunch of business cards. I'm going to leave them there. I don't know if they're enough. So grab one, and then or look me up on LinkedIn. I'm old school. LinkedIn.
Yeah, so for me, I'll say email is my preferred communication style. I think LinkedIn is not scalable in terms of extracting data from there. I'm big on not just owning your data, of course, but also how quickly can you do things and efficiently. Email is just quickest for me. And so my email is just amann@cultivationcapital.com.
Awesome. So first of all, let's give our panelists a big round of applause.